Many investors are looking at large cap schemes in the current market conditions. That's because most experts feel that large caps are undervalued while mid and small caps are still very expensive. Now, this is apparent if you look at the funds that received the highest inflows in 2024. ICICI Prudential Bluechip and Nippon India Large Cap were among the top 10 funds with the highest net inflows. Together, they got over 17,500 crores of investments. So we thought, why not look at the biggest actively managed large cap fund? That's ICICI Prudential Bluechip, which has over 63,200 crores of assets under management. This fund is not only the biggest large cap scheme, but also one of the better performers in the category. Last year, it won the best large cap equity fund at Morningstar Awards for Investing Excellence. In fact, we've also done a video comparing ICICI Prudential Bluechip with Nippon India and HDFC large cap funds, and it did well in comparison to the other two giants. You can check the link in the description. So ICICI Prudential Bluechip Fund appears to be investors and analysts' favorite large cap scheme. But is it that good? Hello and welcome to ET Money's YouTube channel. Today, we will analyze the ICICI Prudential Bluechip Fund to understand why there's rising interest in the scheme. We will discuss the fund's strategy and long-term performance. We will also see if this fund can replace the large cap index fund in your portfolio. But don't look at this video just as an analysis of the ICICI Prudential Bluechip Fund. This video will help you understand how to evaluate every fund. So I suggest you watch it until the end. But before we begin, here's a quick update. This video is part of our fund analysis and comparison playlist with 20 videos. Some of these reviews have crossed over 2 lakh views. I'm sure you too will find value in those videos. Alright. Let's start by looking briefly at the fund's history and performance. This fund was launched as ICICI Prudential Focused Equity Fund in May 2008 during the global financial crisis. It was mandated to invest in 20 or fewer large cap stocks. Now in early 2010, it was renamed ICICI Prudential Focused Bluechip Equity Fund. The word focused was dropped much later in early 2018. Now, it has been a large cap fund for most of its history, so we can look at its long-term performance. We will start with trailing and SIP returns. To get a better understanding of its performance, we will also look at calendar year and rolling returns. Now, the fund has performed better than the benchmark and the category average in all time frame, be it 1 year, 3 years, 5 years, 7 years or 10 years. It ranks among the top 3 in its category except for the past year. That's commendable long-term performance. However, most investors invest via SIP. So let's check the SIP performance of this scheme. The 10-year SIP returns of ICICI Prudential Bluechip is 15.38%. So a 10,000 rupee SIP would now be around 65 lakhs. Now over the same period, an SIP Nifty 100 TRI would have generated 13.91%. The amount would have been 57 lakhs. Now, SIPs and trailing returns can sometimes mislead investors. It's possible that the fund did exceptionally well in 2 or 3 years, inflating the overall returns. So, we looked at how the fund performed in each calendar year over the past decade to check the consistency of performance. The fund has put up a remarkable show. Out of 16 years of existence, the fund underperformed its benchmark and peers in only 5. However, since 2021, the fund has outperformed its benchmark and peers every year. Also, in the years when it did not do better than the benchmark, the underperformance has been in the range of 2 to 3%. Now, what that means is you won't find ICICI Prudential Bluechip among the worst performers in any year. Next, let's look at the rolling returns. Higher rolling returns mean the fund has done well consistently. Now, the fund has outperformed its benchmark over 5, 7 and 10-year periods. It has delivered an average return of around 14% over different periods. There are more surprises if you look deeper into the rolling returns. The fund did better than the benchmark 83% times for any 7-year periods. So let's say you invested for 10 years. This could have been any time through the fund history. You would have done better than the benchmark no matter when you invested. So the returns are good, but how did the fund behave when the markets fall? Well, let's check the downside protection of ICICI Prudential Bluechip Fund. For this, we examined the quarters in which the Nifty 100 TRI index had corrected over the past 15 years and compared the fund's performance with that of the index and the category during these quarters. Now, Nifty 100 has given negative returns in 18 quarters since 2010. In 13 of these 18 quarters, the ICICI Prudential Bluechip fund has outperformed the index, which means the fund's downside protection is excellent. It has outperformed its category in 10 out of those 18 quarters. So, the fund has delivered during rising markets and has shown excellent downside protection capabilities. But how did this fund achieve this? Does it follow a risky strategy for better returns? Let's summarize our findings. The fund has done better than the index and its peers on every return parameter. It has also decent downside protection. So when markets correct, mostly the fund doesn't fall as much. Now, let's move to the next section where we'll examine how the fund is managed. The fund has two fund managers. Anish Twakle has been managing this fund since September 2018. Vaibhav Dusad has been the co-fund manager since January 2021. Twakle joined the fund house as head of research in 2016. As a seasoned research professional, he has impacted the fund house's investment philosophy and process. He manages the fund based on three principles. First, bottom-up stock picking. Second, high conviction ideas. And third, buy and hold strategy. Let's examine the portfolio to check if the fund manager sticks to this philosophy. The fund has 12 stocks which have been part of the portfolio for at least 10 years. These include Cipla, HDFC Bank, Infosys, ITC, etc. About 48 stocks have been part of the portfolio for at least 5 years. This indicates a buy and hold strategy. To be sure, we also check the turnover ratio of the fund. This parameter tells us how frequently the fund manager buys and sells stocks. If this number is 100, it means the fund manager has changed the entire portfolio in the past year. Now, the turnover ratio of the fund is among the lowest in its category. The fund has a turnover ratio of 18%, while the category average was 81%. In fact, the fund's turnover ratio has declined over time. It was above 125% in December 2019, but fell significantly to 29% in 2020 and has remained around those levels since then. So, the fund does follow the buy and hold strategy. Now, let's talk about high conviction investing. The fund's allocation to stocks differs from their weights in the index. This shows the high conviction of the fund managers in the stocks they choose. ICICI Prudential Bluechip does not hold SBI, which is in the top 10 holdings of Nifty 100 index. The fund has allocated only 0.5% to TCS, while the company's weight in the index is 3.28%. Similarly, the fund has allocated 6.5% to L&T, while its weight in the index is only 3.28%. The same is true for sector allocation. The fund's allocation to certain sectors is quite different from that of the index. The fund allocated 22% to banks and financial services stocks, while the index allocated 33%. Similarly, the IT sector allocation in the fund is 8%, while in index it's about 12%. Okay, let's now check whether this is done through a diversified or concentrated portfolio. The fund held 67 stocks in its portfolio as of December 2024. The average number held by large cap funds is 50. This means the ICICI Prudential Bluechip fund has a well-diversified portfolio. This is probably the reason for its excellent downside protection. A diversified portfolio lowers the risk in the portfolio. In fact, the number of stocks in the portfolio has gone up from 55 in December 2019 to 69 in December 2022. Now, the fund managers could have done this as the fund size grew bigger and bigger. The fund has an asset base of close to 64,000 crores as of December end. It has grown significantly in recent years thanks to its excellent performance. In fact, it has doubled in the past 2 years from 35,000 crores to 63,000 crores. The excellent performance of the fund has made investors flock to the fund. Now, there is one more important aspect that we must discuss. It's the fund's cash holding. Now, with such a big asset base, one might think that the fund would hold a lot of cash. However, the fund manager likes to remain invested at all times. The cash holdings of the fund rarely go beyond 10% in any month. Alright, let's now move to the last part of this video. If you are looking to invest in an active large cap fund, you can shortlist this one. The fund's performance is consistent, the downside protection is amazing, it manages risk well, and the stock selection has so far worked in favor of the fund manager. But can this be a replacement for a Sensex or a Nifty 50 index fund? Well, you can consider it provided you are willing to track its performance regularly and be patient during the phases of underperformance. If not, then you're better off with an index fund. And with this, we have come to the end of this video. I hope you found the analysis insightful. And if you did, then don't forget to share it with your friends and family. I'll be back soon with another video. Till then, take care.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.